Welcome. This is the ATRAM webinar series. We are about to start in a few minutes. Welcome. This is the ATRAM webinar series. We are about to start in a few minutes.
Investing may feel intimidating, but once you learn a few basics, it's actually easy to understand. And understanding and using that knowledge to your advantage are some of the most important things you can do to achieve a financially secure future. Here are 5 things to consider when investing. Remember, SURE. S. Size. Know how much you are willing to invest, given that investing doesn't promise returns. Allocate money first for needs and paying off debt. H. Horizon. Before you start investing, you should determine how long you're willing to keep your money invested for a specific goal. Long-term investing, at least 5 years, is best as it allows you to ride out market volatility. The longer the time horizon, the more aggressive or riskier portfolio an investor can build. O. Objective. What are you investing for? For some, it's a short-term goal, like saving up for a car or maybe a vacation. If you need the money soon, you should invest in less volatile investments. On the other hand, your retirement or your child's college education allows you to invest in riskier investments compared to closer objectives. R. Risk tolerance. Not all people are the same when it comes to the risks they are willing and able to take. Do you prefer stable price movements without volatility? Can you stomach short-term paper losses in exchange for higher potential returns? It's best to know yourself. E. Experience. Experience is the best teacher. Actual investment experience keeps one level-headed in making decisions. Investing experience also broadens one's knowledge of different investment instruments. So, before you invest, make sure you keep these terms in mind.
Fantastic day, everyone, Luzon, Visayas, Mindanao, or wherever you are coming from the world. Thank you for joining us in this episode of the ATRAM webinar series. My name is Carlo Abat, and I'm your Business Development Manager, and I'll also be your host for today. Now, friends, in this dynamic world of finance, our ATRAM experts and partners have adeptly sailed through the ups and downs, the twists and turns of the market, and achieving notable returns that have truly set the standards in our industry. Our focus for today is basically delving into the strategies, insights, narratives, and maybe some stories as well that highlight the success of ATRAM's funds for 2023. Now, so stay tuned to learn more about these funds and how our experts have navigated the volatile markets to achieve these returns. Now, if you have any questions, please do not hesitate to click the Q&A button at the button below your screen right now, and you feel free to ask your questions there, and we'll be more than happy to address them at the end of the session today. Also, I'd like to inform you rather that this session is being recorded and that copies will be disseminated in our social media platforms. So to stay informed about our future events and receive important updates, please take a moment to visit our social media pages by scanning the QR code in your screens right now. It's right there. Additionally, a replay of today's session will be available in ATRAM's YouTube page, ATRAM Studio. So just go to youtube.com and you can just search ATRAM Studio, and it will show you rather all the videos that we have had recently. So thank you very much for your continued support, friends. Also, please don't forget to visit our website. That's www.atram.com.ph for more in-depth details about all the funds that we offer. Okay, so if you have feedback as well, please provide them through a brief survey at the end of the webinar because your insights will be very valuable to us, and we truly appreciate the inputs that you have, and we will consider these for our future webinar series. Okay, with those out of the way, ladies and gentlemen, without further ado, let's introduce our distinguished speakers for today. First up, Mr. Luis Miguel Lopa, or Miggy. Miggy is actually a very seasoned finance expert with specialized knowledge in investment management. Currently, he serves as an investment specialist, contributing to the growth of assets under management by offering guidance and in-depth product insights to client channels. Miggy, and also joining us today is the dashing Mr. Charles Wong, ATRAM's investment strategist and head of business development investments, where he plays a very pivotal role in shaping the firm's investment strategies and expanding its client base. With his strong background on financial analysis and portfolio management, he is responsible for developing and implementing prudent investment strategies tailored to each of the client's investment objectives and risk tolerance. So he holds a Master of Science degree in financial analysis from the Hong Kong University of Science and Technology, and a dual BS degree from De La Salle in Manila. So he basically combines academic rigor and practical expertise. So Charles and Miggy, great day to you all, to you both.
Thank you, Carlo. Thank you for that very kind introduction. I'm thankful for everyone here watching this, and I look forward to helping everyone learn a bit more about some of our top performing funds.
Charles?
Good afternoon, Carlo, and good afternoon to our viewers as well. So thank you very much for tuning in and joining us here. Of course, with the help of us, together with our colleagues. So we're here to bring you the best of the best from ATRAM Investments.
We'll hear more about these two dashing gentlemen later. Now that we have introduced ATRAM's competent and experienced team, we will begin with today's discussion by taking a look at the performance of select ATRAM funds last 2023 and their ranking against peers and the benchmark. So with that, friends, we start off with the ATRAM Global Bond Income Feeder Fund, which has generated a whopping, listen to this, guys, 6.12% return, and it holds the #1 spot in Peso Global and Asian fixed income funds in the Philippines. So at this point, I'd like to call Charles to talk more about the fund and the strategies. Charles, a lot of investors are saying that fixed income as an asset class is the little brother of equities because it's not very exciting. But little do investors know that the market, the volume for fixed income is significantly larger than equities. So can you share with us your outlook on fixed income and its expectations for the rest of 2024?
Sure. Thank you, Carlo. First things first, sabi ko sa return, wow, 6.12% return on a bond fund is something that we only dream about in the last 15 years. Since 2008, when interest rates were so low, parang hirap tayo lahat sa pwede makahanap ng return on our money. But right now, we are seeing a change in the paradigm. And of course, we at ATRAM want to deliver you the best of what we can find. And of course, 6.12% is something that's amazing. So when you look on the next slide, I'd like to introduce to you the fund that is responsible for that. So it is the ATRAM Global Bond Income Feeder Fund. So what is this? It's a feeder, it's a fund that feeds into a fund that's managed globally. It's PIMCO GIS Global Income Diversified Income Fund. So what is it? It's a dollar-based fund. It's actually invested globally. So you can see on the middle, it's pretty much FINMA, FNMA is pretty much all a government-related company. So on the right-hand side, you'll see that government-related investments in this fund is close to 30%. And this is invested in a lot of those safe instruments. And when you can see on the left-hand side, this is an income distributing fund. So every quarter, we distribute some of the coupons that we get from the fund manager, which is PIMCO, and then we give it to you as our investors. Of course, we have also seen the annualized distribution yield go up. It's now at 4.77, but we expect that to even go higher for 2024 as interest rates continue to remain at a very high level. So on your first question, if you look at the next slide, so what is our outlook for fixed income this year? So we'll start with the inflation rate first. So what is inflation first? Inflation is parang yun yung annual change ng presyo. So we all feel that. Ramdam natin kung umaakyat yung presyo. And this is the one thing that affects all of us. Di ba? Umaakyat yung presyo, we immediately feel poorer. So lagi nga natin sinasabi, ba't ang mahal na bilihin, ang bilis umakyat, pero bakit yung sweldo ko ang bagal umakyat? But anyway, those are the things. So what we can see is that over the course of the last 15 years or so, inflation over the 2010 up to 2020 has remained fairly benign, meaning hindi siya ganun kalakas. It's only after COVID, when government started spending all the stimulus money, that inflation picked up significantly in 2022 and 2023. And of course, we also had that start of the Ukraine-Russia war, wherein yung oil natin, parang nga sabi natin, when tinignan mo yung gasolinahan, first time ka makita ng triple-digit gas prices or even diesel prices. But of course, we've moved that. How central banks have raised interest rates significantly. So for both the US, the global central banks, and even for us Philippines, our own BSP has raised interest rates to 6.5%. So what does that mean? Well, it means it's good for us fixed income investors because interest rates are now high and inflation is steady. We believe that there is a case for investments in fixed income, especially government securities. So right now, inflation rate for us, for our outlook for 2024 should remain benign. So we might be trading in the range of between, for the BSP, it's 2 to 4 range. The last rate for Philippine inflation was 2.8. And of course, investing in government securities will lead you a higher rate than that one. So there is attractive ways to invest your money already for this year. And of course, this fund of ours brings you that objective. So kumaga, if you look at any government securities, like let's say the 5-year will yield you something like 6.5%. That's a pretty good deal already. So that's why there is a case that we'd like to give out to our investors that this is a fund that is worth investing on. So that's my answer to your question, Carlo.
Actually, Charles, my next question, you basically answered it already. My next question was supposed to be why I should consider investing in this fund. And you basically mentioned already that it acts as a defensive portion of your portfolio because you said you receive regular coupons and all of these things. So it gives you some sort of stability in your whole investment portfolio. Am I correct in saying that, Charles?
Yes. Onto your question, I have another slide for you.
All right.
If you look at the next slide, this is the historical distribution yield of the fund. This is on a monthly basis from PIMCO, but for us, of course, we give it to you quarterly. And what we can say is that, wow, umaakyat na umaakyat. So on the right-hand side, you'll see the distribution yield percentage. And on the left-hand side is the distribution income per NAV pool. So what we can say is that over the course of the last 4 years, when the fund was, investing, we averaged somewhere between 3, less than 4% yield. 2023, we managed to give you a distribution yield of 4%. 2024, right. January, we are now at above 5%. So there is an attractive case for investors, both young and old, conservative and aggressive, to have bonds as their investment outlet. So as what your question nga kanina is, we have a saying sa investment universe, so it's an investment professional, is that so pag may hawak kang bonds, hindi ka yayaman. But lahat ng mayaman may hawak na bonds. So meaning, the bonds help you give stable income. And this is the proposition that we have to the investors of this fund. So back to you, Carlo.
Pero Charles, there's good regular income coming in. Can you share with us the driver of the allocation of the fund?
Of course.
What makes the fund manager choose a certain asset over the other and all of these things?
Sure, no problem. Next slide, please. So this is how PIMCO's process works. So they start with the top down, meaning they start from the very top. They look at the globe. Each country, each region is being evaluated. So this is what they call the macroeconomic themes. So you have secular, which is the longer term trends, cyclical, which is the shorter term trends, and of course they have their own investment committee who evaluates and approves these things. And of course, in between, syempre, we have to make sure that when you buy bonds, kasi nga utang yan ng company, utang ng government sa'yo, you have the credit team to make sure na, kailangan ko tingnan to, makakabayad ba to. So you have to make sure that those things come in. And of course, that forms part of the credit research. So on the top, you have macroeconomic team. So they make sure the economy is doing well. They have to see kung may income ba pumapasok sa economy niya. And of course, on the bottom side naman, they have the credit team, making sure that they are on the ground, researching each company, each government. Everything that is worth investing is most important is makakabayad pa to. So yes, my interest rate, that's the price that they pay. But of course, they make sure na the most important thing is, do I get my money back? Do I get a return of my money? So that's the most important part of how they construct the portfolio. So back to you, Carlo.
So basically, Charles, two things I got from your diatribe on the fund is, first is, this particular fund has a specific role in your portfolio because it has the stability portion. It gives the portfolio stability, number one. And then the second thing, which was very interesting, that what you said, walang yumayaman sa bonds, pero lahat ng mayaman may bonds.
Correct. Very correct, Carlo.
Thanks, Charles, for sharing your views and strategies on the ATRAM Global Bond Income Feeder Fund, which again, friends, returned 6.12%. It's not heard of in recent years that a bond fund would return that high. Charles, maraming salamat. I'll get back to you again later.
Okay.
Next in our lineup of best funds for 2023 is the ATRAM US Multi-Asset Income Feeder Fund, and it returned an impressive 15.45%. It secured its position basically as the top peso global balanced funds in the Philippines, and is designed to achieve both income and long-term capital growth. It does so by investing predominantly in collective investment schemes focused on the United States, corporate debt securities or fixed income securities, and equities. It's managed by Allianz Global Investors, one of the renowned active investment managers. Okay, so we call back Miggy to talk more about this fund. Miggy, can you elaborate more on the significance of investing in the U.S. market? The U.S. being the largest economy in the world, home to the leading companies also that operate globally as well.
Yes, for sure. Thank you for that, Carlos. So moving on to the next slide. So just for a very quick background of the fund. So this is a fund that primarily invests in stocks and bonds galing sa US, no? The main benefit of this fund is that you have exposure to the overall growth of the US economy, which we know is the world's biggest and one of the world's most resilient, especially in recent years. And they do this through investing 1/3, usually of their capital, in stocks or equities, another third into convertible bonds, and another third into high yield bonds. So 2/3 of it in fixed income or bonds, 1/3 of it into stocks. And the main benefit in our eyes, no, when looking at this fund, is that dahil sa exposure mo to bonds or fixed income, you get more of yung sinasabi nga nilang asymmetric risk-return profile. So, that's a lot of finance jargon, but what it generally means is that pag bumaba yung stock market, let's say if there's a war or a recession, this fund should offer a lower drawdown or hindi siya gaanong bababa as compared to the broad stock market. And this is mainly because of the income that this generates from its bond holdings. So we think that while it may not participate fully when it comes to the upside or the growth of the US stock market, when we look at it, when you look at the downside, you're very much sheltered when it comes to market dangers. Now, just to go back to your main question, no? So what makes the US really such a breeding ground for, as you said, Carlos, some of the most well-known and successful companies that we know? So, and my answer to that is US dominance when it comes to venture capital funding. So first of all, no, what is venture capital? Diba? It's maybe a fancy word that you hear around. Maybe you guys have watched Shark Tank and are familiar with it. So venture capital or VC investing generally refers to funding provided by investors to smaller or early stage companies that have a lot of long-term growth potential. So if we can move on to the next slide just to highlight this. Some of the most promising and well-known companies na kilala natin, we have here OpenAI, of course, the makers of ChatGPT, SpaceX, Amazon, Tesla, of course, we have Apple. All of these companies are backed by venture capital. And to highlight this further, just moving on to the next slide, these are just some quick numbers, no? So these are VC-backed companies as a percentage of the overall US stock market. We can see here that 43% of the US stock market is VC-backed, 57% of the total value, over half, 38% of the employees, and finally 82% of the R&D or research and development. That means 82% of the funding going to researching new technologies or new business practices, medical practices that can deliver better products and services come from venture capital backed companies. And now to finally tie it all together. So why the US, right? If we can go on to the next slide, this is a map of how much venture capital flows goes into these top economies. And you can see by far the US is the top country here with over 48.4 billion in annual venture capital flows. And this is more than really the next 9 combined. And with so much money flowing into now going into AI, technology startups, other fields like biotechnology or financial services, the countries where most of the capital is deployed to are the countries that are most likely to reap the benefits of these technological advancements that
Uh-huh.
these companies are doing mismo. So that's why I think, if you have a global perspective in investing, it's really very hard to ignore the US, where most of the technological innovation is really happening today.
So necessity is the mother of all invention, and investing in these ideas that would address these necessities would be the lifeblood of these venture capitals. Now,
Yes.
how does this fund make it suitable for someone starting their investment journey or maybe in their 30s? What makes this fund appropriate for them, Miggy?
Yeah, so actually, thanks for that question, because actually I'm gonna turn 30 this year. So I feel like this is a question that's very personal as well, since I feel when you hit that age, when you hit your 30s, it's a time that you really have to take life a bit more seriously, and you have to focus on investing, because in my head, this is when you start saving up for marriage, or maybe the schooling of your future kids, or even, helping your parents as they enter their old age. So again, why this fund? Why is this fund maybe very suitable for those entering that age bracket? And I believe, going back to what I said earlier, also if you can move on to the next slide to highlight this, um, the fund, as you mentioned earlier, Carlo, it returned around 15.5%, no, just in 1 year. This is of course, a very impressive return. But at the same time, uh, this fund will also protect you if things go bad, if things go south, if we see, God forbid, a recession or some huge natural disaster, or war. The fixed income holdings, which is two-thirds of this fund, will really help you, stay afloat during that time. And this is really because you could receive consistent income from those fixed income holdings. Just as an example, US high yield now, which is a third of this fund, returns around 6 to 8%, the high yield index. So, and no matter what, even if the stock performance goes really bad, you're still going to be receiving that sort of income
Yeah.
through this fund. So you participate in the upside, maybe not as much, but if things get a bit rough, you don't want to see what you're saving for, maybe your parents' retirement, your wedding, go all the way down the drain. No, there's still some protection there. So this is why I think this is, a pretty good fund for someone entering my age bracket.
I guess the story behind the benefit of this fund is really more the diversified approach of it, and its a double-tiered strategy of both income and growth. So you're invested in fixed income securities and equities as well to provide a kicker for the entire fund. So it's basically a fund that has a little bit of everything, kumbaga.
Yes, exactly. And that's what makes it really nice. But they say don't put all of your eggs in one basket. When one part of your portfolio isn't doing so well, it's usually a good idea to have another part of your portfolio helping maintain your gains or outperforming. And this fund really does that.
Great. Miggy, I'll put you on hold for a moment. Thank you very much for that insightful overview of the ATRAM US Multi-Asset Income Feeder Fund, which again has returned 15.45% in 2023. So it's again one of the best funds that we have. Before we go on to the next fund, again, I encourage you all to click on the Q&A button at the bottom of your screens. If you have any questions there, please feel free to ask them. And again, we will try to address them at the end of this session. Now, we shift our focus to the next top performing UITF on our roster, the ATRAM US Equity Opportunity Feeder Fund, which generated 37.13%. That's 37.13% return, and it holds the number one spot in US dollar equity funds. It aims to achieve capital appreciation by investing all or a significant portion of its assets in a collective investment scheme that invests in equities in the US, believed to possess sustainable growth characteristics. And this fund is actually managed by Franklin Advisors, again, one of the biggest fund managers globally. So I bring back the dashing Charles to the discussion. And it's very interesting, Charles, no? What are the specific sectors or themes of the fund particularly bullish from the medium term to long term, let's say 3 to 7 years, are the sectors which the fund is invested in particularly bullish on the market?
Okay, back to me, Carlo, but let me start first. Wow, 37% return. So it makes me really happy. Ang saya-saya nito every time I see our fund doing well, and of course, our clients doing well. So, di ba, for those invested in making 37% return in a year, is
1
parang
year.
wow talaga, di ba? And seeing our clients make that money and also be happy makes our job, our work very fulfilling for all of us here, di ba?
Correct, yeah.
Parang this is our contribution to all our clients, di ba? It's something else. But of course, with your question, let's move on to the next slide. Just like to give everybody a summary of what this fund is currently holding. Yes, as you mentioned, this is the target fund is the Franklin U.S. Opportunity Funds, where it is primarily focusing on U.S. Equities, so very U.S.-centric na to. Of course, this is spread out in a lot of these sectors from the U.S. But as usual with the U.S., ano bang top performing sector? Number one is of course IT information technology, where you see on the middle, a lot of us will recognize some of the most famous names that we use in our daily lives. Diba? Amazon for those mahilig mag-shopping, Nvidia for those who mahilig mag-gaming like me, or even for those who mine cryptos. And of course, we have Microsoft, which we're using right now, Windows. And of course, for Facebook, those who actually want to keep abreast with their friends' activities. But apart from IT, the fund is actually very focused on three of the major themes that they are looking over the long, short term, and medium term. Number one is medical. Wait, let's move on to the next slide first, okay? So number one, medical technology. So they're very focused, number one, on robotics. So you've seen, for those who watch a lot of documentaries like me, they are now able to use robots to do surgery. So this is one of the main fields for forefront of medical technology. And this fund is also invested in a lot of those companies that do that. Eli Lilly is one of them. Apart from medical equipment, they're also into drugs, which is very useful for us. In fact, Pfizer, which invented or founded a COVID drug using mRNA technology, is something that allows the medical community to further drugs that can help counter cancer. So this is a very significant finding. Apart from the COVID vaccine that we got, it's also for the future of those patients who are being treated for cancer. Next is energy transition. So apart from solar and wind, there are a lot of ways to profit from the change currently we are experiencing, from the dirty coal, oil that we burn to something that's more renewable, that's sustainable. And of course, there is money to be made. So apart from solar and the wind, there's also battery technology, which is essential to the new types of electric vehicles that we are using. Last but not the least, of course, digital transformation. So one of the key products that happened during COVID allows us to do this webinar. Of course, Zoom. Diba? Every time there's a crisis, there's always some new technology that comes out and allows us to do our work better. So apart from Zoom, some of the other examples was DocuSign, where you're, for some who are actually using it, you're able to sign documents online. That's secure. So this is another one of the favored sector that this fund invests into. So that's the answer to your question, Carlo.
Charles, how does the fund, or the fund manager for that matter, identify and select which companies with which companies have sustainable earnings and cash flow growth? Because it's very, very nice that there is an environmental aspect to it, but what determines whether these companies are actually sustainable as far as providing returns are concerned?
So if you look on the next slide, there are three main factors that they look at. Of course, growth, quality, and valuation. So number one, growth. Of course, you want to be in an industry that is, as they say, lumalaki yung pizza pie, di ba? There's market coming in, there's people who are in demand of this product, And of course, they like to identify long-term growth trends. Diba? You have to focus on businesses, disruptive businesses. And of course, the profit cycle na pasimula pa lang. But apart from growth, where revenues and sales go up, you also want to make sure the quality of those companies and the quality of the earnings coming in is what we say of high quality, meaning it's a recurring thing every, let's say, monthly, quarterly, or even annually. And of course, some of the things that you look at is there's a big competitive advantage from this company, whether it be brand name or a product that is very hard to replicate, like medicine, those kind of stuff. And of course, you want to make sure that the people who run this company run it uh, with the welfare of the shareholders to make sure that the profit is maximized for us who hold your shares. And of course, the last thing is valuation. We want to make sure that whatever we buy or the fund buys is of reasonable value. Sayang naman kung may pera ka, bibili mo something na sobrang mahal. Of course, you want to look something that with a fair price. And of course, they have analysts who make sure these prices that are being sold are reasonable. And on the next slide, I want to emphasize on this one. So this is the limits of the fund. So not a lot of funds actually put this forefront in their products. But one of the nice things I want to focus on is the risk. So you want to make sure that the fund or even your money, where in the regular returns or the annual returns, hindi pa ganun. You want to make sure na parang one straight smooth line, suabe, parang si Carlo, suabe, di ba? So you see here, they strive to limit the single industry exposure to less than 25%. And of course, for a fund size that is $6 billion, they like to hold a maximum of 90 securities lang. And of course, the most important part is single security exposure. You want them to make sure na hindi masyadong mabigat. Was what they say, don't put all your eggs in one basket, especially if your egg is a very big egg. So it's limited to just less than 10% of the security. And of course, since they're very US-centric, they want to make sure that at least 90 or close to 90% of that is invested in US-only companies. So back to you, Carlo.
Fantastic. Take my money, Charles, 37%. I'll be more than happy to look into that fund. Thanks, Charles. I'll get back to you in a while. Now, moving forward, friends, we have the ATRAM Global Total Return Bond Feeder Fund delivering an impressive, again, this is a bond fund, an impressive 7.71%. And it holds the top position in dollar global fixed income funds in the Philippines. Now, I'd like to invite back Miggy to the discussion. Miggy, how does this fund, what is the role of this fund rather in my portfolio in times of economic weakness? Because we all know the market will go up and down, and I have no control over that as an investor. But what would the benefit of having this fund in my portfolio? How will that benefit me?
Yes, thank you for that, Carla. So first, if you move on to the next slide, I just want to give a very brief overview. So this fund, the Global Total Return Bond Fund, this fund aims to capture high income with also the possibility of capital growth through investing in fixed income securities or bonds. So this fund really solely invests in bonds or fixed income instruments. And two things I really want to highlight with this fund is that they do a very active management style. So what that means is depending on the economic conditions that they expect and see, they then alter the type of bond investing that they're going to do based on what that situation calls for. Because not all bonds are the same, not all bond investing is the same. Just to give an example, when times are good and the economy is roaring, what Jupiter does, or what the portfolio managers of the fund, what they do is they invest in bonds that are lower down the quality spectrum. So these include things like high yield or junk bonds, so not as creditworthy or safe, but you also participate in more upside. But when they see signs that the economy is going south, then they start investing heavily into high quality bonds or bonds from countries like Australia, the United States, Switzerland, Singapore.
Right.
Very safe bonds. And secondly, I just want to highlight their risk management and adaptability. Again, it depends on the economic environment, and they have analysts who really look at that and take things into consideration. So back to your question, if we can move on to the next slide. The first thing I want to say is, why do bonds do so well, no, when the economy goes south? Or why
Right.
does everyone really advocate for the holding of bonds when you go through periods of economic weakness, such as in the great financial crisis in 08, 09, or during the great lockdown that we saw in 2020, where all countries, all the economies, basically the whole world, everyone's economy started contracting. So first is that is the safety net factor of
Right.
bonds. No? So bonds are usually issued by very financially stable companies or entities like governments, as I mentioned, or established corporations. And during tough times or tough periods, investors, what do investors seek the most? They seek predictability and stability. So they go to these bonds, these high quality bonds, because they can receive consistent income. That's why you see so many investors usually pulling out their money from the stock market and investing it in bonds when times are a bit tough. And second of all, again, bonds pay fixed terms of interest. So you receive income very consistently, usually twice a year or semi-annually. And what's nice about this fund, if we can see here, is that it really aligns with the defensive characteristics of funds, which makes this fund a very good holding. Even if it's not, let's say, your majority holding, if you put 20% in it, if the economy turns south and there's a war or global volatility, uh, this fund should really do well. You should get consistent income and you should get capital gains from this fund. If we can concentrate on the fourth bullet point, you can see here the average credit rating of the fund is a triple B. What that means is that it is an investment grade. Most of the holdings in this fund are investment grade rated, which means they are very safe to hold. They are deemed very safe to hold by global investors. And second of all, if you look at the right-hand chart, when it comes to duration or where most of the fund is affected, if interest rates go up or down, most of this is in developed market government bonds, which are really the safest type of bonds. So most of the risk is centered there. So
The
that's
risk is
yeah.
contained to developed markets. One thing I got from what you just mentioned is, um, again, to highlight the stability of the bonds in one's portfolio.
Yes, because this fund now, it's designed to deliver an annual income or distribution yield of 4 to 5%. Currently, I believe it's yielding now around 5%. Its distribution yield is 5% for clients. So this is 5% almost assured uh, over the next few years. This is the average duration or the effective duration of this fund is 8.9 years. You can look at this in a way also that most of its holdings are locked. This yield or this interest rate is being locked in for quite a duration of time. And one thing that I want to add also that makes this fund a nice investment is that we have seen inflation start to go down, not just in the US, but in the Philippines from above 8% to more recently below 4% already. So
Point
this is
eight,
within
yeah.
the BSP's target band. And it's pretty evident that as supply chains normalize, now we're going to see a continued reduction when it comes to inflation. And when inflation usually goes down, the yields of bonds usually go
Interest
down
rate.
as well. So it's a very good idea to lock in the yield, the very attractive yield that we're seeing now for bonds across the globe, and locking in that income for yourself with the potential of capital gains as well as interest rates go down. And this fund, we think, is really a perfect fund to do just that.
So basically, ngayon pa lang, you position yourself already to when interest rates are expected to go down towards the second half of the year, to take advantage of the potential market movement then.
Yes, exactly, Carla.
Miggy, thank you very much. I'll get back to you in a while. Again, that was the ATRAM Global Total Return Bond Feeder Fund, which returned 7.71% last year. Now, we go to the last fund that we will feature today. And when we say this is it's the last and not the least, we really believe that it is not the least. We have the ATRAM USD Global Technology Leaders Feeder Fund. It used to be the PruInvest USD Global Technology Equity Feeder Fund, which has generated, I don't know how else to describe this, but with much excitement, has generated a whopping return of 49.33% for your dollars last year. So basically 50% gain last year. And it has ranked number one thematic dollar equity fund category. We'll bring back again Charles. Charles, this is a dollar technology fund. What makes it different from other dollar global technology fund and peso denominated technology funds?
Okay, thank you, Carlo. Pero wow, 49. Malapit na siya sa edad ko, and that is a very impressive return for an equity fund. But if you move on to the next slide, so of course, the biggest difference between this fund and the other technology fund that we have, of course, this is denominated in dollars. This is being managed by Spring Investments. And unlike the other one that we have, it's denominated in peso. So you can subscribe in peso. Redemption, of course, is in peso. But since this one is a dollar fund, and of course, its products are also denominated in dollars, bawas yung cost mo. So the hedging cost is removed. And of course, the cost to manage the fund will be less. That means better, higher returns for you, our investors. But the other more important one is this is a very US concentrated fund. So it's about 92% invested in US technology stocks, which did fantastically well last year. And of course, the concentration of this one is much higher. You can see actually Microsoft investment, yeah, almost 10 na. And they're invested in main technology companies, which is occupying about 80% of the fund. And of course, it includes the Magnificent Seven over there. And if you look at the next slide, why is this so strong? Is number one, the earnings. So apart from looking just at the price, we, as the fund manager of this one, also look at how earnings grow. So kumbaga, since you are a common shareholder, you buy their stocks, you're also entitled or you have a share of that income. And of course, as earnings go up, that drives the prices of the stocks higher. And of course, when you look at the left-hand side, which is the US, the Magnificent Seven, which I mentioned earlier, had an earnings revision upwards of 4% as a group, as an average. When you look at the S&P 500, the 500 stocks had an earnings revision downward of 11, while the other 493 stocks have a downward revision of 15%. And on the right-hand table, you see how each company has grown. Of course, Apple, medyo masama last year, mainly because of China, but over the course of the last 5 years, they've done spectacularly well. Nag-rotate lang talaga sila. And the other stocks or companies that did so well was Amazon. Lost money. Last year, they had from zero or loss in 2022, they made $10 billion last year for a whopping 1,000% return. Right. The same with Alphabet and which is Google, and then Meta and Facebook. Microsoft did 7%. Tesla, a bit weaker because EV was weaker for China. But the other fantastic story, of course, is NVIDIA. Although their earnings is only up to Q3 of 2023, we'll be reporting their full year 2023 tomorrow. But pretty much still up 1,200%. So this Magnificent Seven, as they say, yes, mataas yung inakyat ng prices, but because the earnings did so well. And if you look at the next slide, so why is this so strong? Is this one. This is the S&P 500, all 500 stocks. They're made up by 11 sectors. So what's the top performing sector over the last 5 years? Tech. You made 300%, or pretty much nag three times yung pera mo. If you look at the rest, although the next best performing sector is consumer discretionary, may tech pa rin dyan. Nandiyan si, I think nandiyan si Amazon. So the next sector, which returned about 160%, is also included some of the tech names, including communication services. Nandiyan naman si Facebook. So the Magnificent Seven, although led by tech, which is the blue line, which we can see Apple and NVIDIA, the rest, the other 7, are distributed among the two other best sectors. So why? Because the global technology leaders continue to innovate. Now we have AI from dati. We only started with the internet. And then during the pandemic, they had remote work and remote studying. They also made money from us through there. And now, of course, artificial intelligence is the new sector or the new big thing, which would power us to do better work, more efficient work in the next, I don't know, 10, 20 years. So this is the big thing, and that's where the money is flowing. And that's why the technology sector continues to be the outperforming fund. And as you said, returned 49% last year. So there's a case really for the strength of the technology leaders led by the US companies. Back to you, Carlo.
Basically, I was looking at the Magnificent Seven, Fabulous Seven.
Magnificent Seven.
Magnificent Seven, and it would be very hard to imagine someone who doesn't use at least 3 or 4 of those companies. Another thing that I got from what you said is that over the past 5-6 years, we had no choice thanks to, well, it's not really thanks to the pandemic, but if there's something good that came out of the pandemic, is that everyone in the world had no choice but to become a little more tech savvy than what they were used to. So dati, we do not know how to open a Zoom room. We didn't even know what Zoom was. But now all of us are experts already in Zoom. Same with online shopping, for example. So it basically changed the consumer experience end to end. Charles, before I let you go, what would be the determining factor why a fund like this, as risky as it is, be part of my portfolio? Bakit ako mag-i-invest dito? Baka mataas na yung return niya last year eh.
I agree. Well, as what you said, risk is always the determining factor for each person's investment. Your risk and return and your liquidity needs. Of course, equity funds generally are the very risky fund wherein you really needed a very long-term horizon. But of course, when you try to look at which fund is appropriate for you, number one, you have to look at your age group first, diba? Risk tolerance. If you're a younger person in your 20s, you just started work, single ka pa, wala ka pang girlfriend, boyfriend, of course, you have all the money in the world, you can invest pretty much all of your money in a risky fund, diba? You have more time to recover due to the volatile nature of the fund. And of course, as you get older, like as what Miggy says, you're entering the age of 30, then you can dial down your exposure on equities. You can split it, let's say 40% na lang, 60% na lang ang equities, and then you put some in bonds, starting with 20, 30, 40, and then as you grow older to my age, may asawa at anak, pamilya, and then you have to pay tuition, your exposure to income and bonds go higher, and then of course, you want to have that growth component. Sana diba? May portion ako ng pera ko, maka-return din ng 50%. You want to reduce that exposure smaller. But still, diba? You're still invested in the market. Kailangan mo lang bawasan. And of course, for a lot of us investors, it's up to us to decide. And if you need help, we have people from ATRAM, the wealth people, the sales people, our financial advisors. Call them up. They can help you up. And we also like to mention that they're always available to answer your queries. And of course, we'll be happy to help you out during that time as well. So back to you, Carlo.
Basically, it all boils down to someone's risk appetite and investment horizon.
Correct.
Thanks, Charles. We'll get back to you later. There you have it, friends. Our top performing ATRAM UITFs for 2023. Before we proceed to the Q&A, I'm looking at the questions right now, and there seems to be a very long list of questions there already. We are delighted to share with you that ATRAM has been awarded the Asset Manager of the Year in the Philippines by Fund Selector Asia Awards in 2024. This recognition highlights our steadfast dedication to our clients in delivering cutting-edge investment solutions to every Filipino. Our unique approach to asset and fund management has consistently helped clients achieve their financial goals. And with a team in a team that is composed of Miggy and Charles as well, of experts and that are committed to excellence and innovation, we continue to push the boundaries of what is possible in the Philippine investments industry. We would not have been awarded such award if not for you, our clients and our partners. So again, maraming salamat for your ongoing trust and support. Now, at this point, we would like to move on to live questions from our audience, and we have a lot of questions coming in. I'll call back the dashing gentlemen, Miggy and Charles. I think this one, Charles, goes to you. With the this question is from Zoom. With digital transformation expected to double the revenue growth of companies, you mentioned earlier, kasi that revenues have been very, very healthy for tech companies. How does the ATRAM US Equity Opportunity Feeder Fund position itself to benefit from the tech run that is happening?
Well, thank you for that question. Well, for one thing, when I flash the US Equity Opportunity Fund, you'll see that a large part of your investment is actually in the tech sector. They're the ones driving innovation. So when you see how Amazon has already changed their warehouse, hindi na tao yung kumukuha ng mga gamit. It's all done by robots and machines. Okay, so one thing for sure is Amazon can also sell that technology. They can sell that to other companies who need that. Imagine mo sa warehouse dati, kumukuha ka pa ng mga gamit sa taas. Ngayon, may machine na or robot na gagawa for you. And for the fund managers of that fund, they use the same process they do to invest your money or part of the fund and to also generate the returns that they get. So it's already part of their process. And a lot of the innovations that is happening globally actually comes from US companies, which is also part of their theme or investment universe. So, and that we believe is how they're able to actually take advantage of, number one, being the US, and number two, being invested in the largest tech company in the US.
I think something also to take note of is when we say tech, we're not only talking about information technology here. We're also talking of energy technology. We're also looking at medical technology. So it's a dynamic industry and an all-encompassing one. Thanks, Charles.
Actually, if I may
go.
For example, like when you look at kanina the exposure per sector, you actually see financials in the exposure. Pero pag tinignan mo, it's actually the e-wallets, diba? Or the online payment scheme, still part of technology, but some of them are actually considered tech. Considered as financials because they are part of the financial industry. They are licensed money handling companies, and that helps transacting or moving money across either within the US or within the global boundaries. So back to you, Carl.
Yeah, thanks, Charles. Miggy, you already answered this question earlier, so I'll skip to another question. How does the ATRAM Global Total Return Bond Feeder Fund manage interest rate risk? This was an interesting question, especially in a dynamic global environment where interest rates can just move up and down without independently of one another. How does it manage risk in an ever dynamic global environment?
Yeah, definitely. Thank you for this question. This is actually a really good question, a bit complex, but I'll try to laymanize it as much as I can. So to provide also some context for the others who may not be as familiar with financial markets. So there's two main situations, for interest rate risk. One is when interest rates are going up. The second is when interest rates are going down. So first, when interest rates go up, what really happens? First is that bond yields should also go up. Second is that the cost of debt or things like mga housing loan or auto loans, the rates you pay in your credit card should also go up. So when this happens, what the fund managers do is they prefer to hold on to shorter tenor bonds. So in other words, these are bonds that mature, let's say, only in a year or two, or maybe even in a few months, since this allows them to get their capital back and then reinvest it into bonds that have even higher yields, let's say a month or two after, because they get their capital back very quickly. Second, since the borrowing costs of companies also go up, this means more risk. So what happens is the fund managers also prefer high quality bonds. So let's say bonds of, let's say, the US over bonds of let's say even the Philippines, because there's much less risk in these governments. Or even if we're looking at companies, the fund managers would rather hold a bond of, let's say, Apple versus a bond of Ford, especially as auto
Correct.
loans start to go up. So that's one way the fund managers really play interest rate risk. And of course, vice versa, when the interest rates are going down, fund managers again prefer to lock in that yield. Since we can see interest rates should fall down and the yields on these bonds should fall down, they want to hold on to bonds that mature maybe in 10 years, maybe even 15 years. Since for 15 years, you can get 6%. Maybe if you wait 2 months later, that same 15-year bond, it might yield 2% less, something like that. So that's how I would say the fund managers play it. If interest rates go up, they go defensive. If interest rates go down, they go on a bit more of the offense.
Miggy, the thing about fixed income securities is that to a layman, it might be difficult to understand the dynamics of it. That's why it's very, very important to have a fund manager who actually understands the intricacies of the fixed income market, so that the client, the investor, will not have to worry anymore on how to monitor interest rates and whether the duration of the fund is appropriate and all of that.
Yes,
Everything
definitely.
is left to the fund manager.
Because usually, I guess in the context also, now the bond market here is not as developed or as big yet as other countries. Usually, when we talk about bonds, we buy usually from our banks and then we buy and
Correct.
forget. But there's actually a lot of money to be made as well in actively trading these
Correct.
these bonds and positioning properly depending on the economic environment. And this is something that this fund, no, especially the managers at Jupiter, does very well.
Exactly. So it's the fund manager's responsibility to manage these bonds. But Miggy, I won't let you go. But something more basic. It might come off as a weird question, but it's a very, very valid question that we got from Zoom. Is it a good time to invest in UITFs now?
Yeah. What a contrast, between
Diba?
those two questions. But yeah, my answer here is very simple. Yes, of course. Of course, it's always a good time to invest. But they say the best time to invest was 10 years ago. The second best time to start investing is today. And this is because over the long term, markets go up. And a lot of people were saying that returns were done for by mid last year. But since then, the US stock market say went up another 10% or maybe even more. And we have so much, I discussed some of this in my previous slide. We have so much technological innovation happening, not just in technology with AI, but even in things like renewable energy, exploring hydrogen as a potential renewable energy source. So in so many fields, Charles also mentioned when we talk about biotechnology or pharmaceuticals, there's so much innovation and development happening today, which honestly will just continue accelerating because of our inroads to AI. That these developments will also translate to the bottom lines of a lot of the companies that we're seeing globally. So, you would want to be exposed to those technological advancements happening in all of these different sectors. What I can say is, in order to manage your risk, there's this concept called dollar cost averaging or peso cost averaging, where you put in a little bit of your initial capital at a certain fixed interval. So let's say every month when you get your salary, you put 20%. In the Philippine stock market, put 20%. Let's say in the US multi-income fund that we have, and you continue to do it every month. And what happens is, you might not get the low points of the market. On average, you might not get the perfect bottom, but you also won't get the perfect top. So over time, your average cost goes even, and flat, and you just get to, play the overall growth of the market without have to worry about timing the market. Because honestly, Carl, I have so many friends who, I've been talking to them about investing for the longest time, but they say the market's too high, the market's too high. They've been saying it for the past 5 years, and sayang,
In the words in the street, nga na lang sila.
Yeah, exactly.
I guess what your message is basically two things which we have always espoused as investment advisors. No, number one, is you invest early. So number two, you do it regularly. Invest
Yes,
early and
exactly.
invest regularly. That's I think there is no better way to put the ideal investment behavior or habit than that. Thanks for that, Miggy. Charles, I asked Miggy a very simple, a basic question. I owe you a basic question also. But I will stick a complicated follow-up question on this. First is, what funds should I invest in if I'm a beginner? And then
Wow.
I will follow it up
Okay.
for both of you gentlemen.
Well, for beginners, we can always recommend starting with the lowest type risk of investment, diba? The short-term money market fund. You have the bond fund. You can start there. So let's say you have 100 pesos. You can put majority in a money market fund, like 80, 90 pesos, and then you can start putting some in equity. And then once you get the hang of it, diba, you're able to see, oy, may nakukuha akong return after this one, may nakuha akong ganung return on this one. Not bad. So let's try to add some more. As what Miggy said, dollar cost averaging, and you add a certain you set aside a certain percent of your monthly income, and you invest. Diba? But the key is you have to start learning how to save and invest. Saving is one part, but investing is also the other part that helps grow your money and to help you achieve your dreams. Diba? Saving that allows you to put aside the money to make sure you have emergency use of those cash. But investing allows you to grow, which will give you the aspirational dreams that you have always wanted. Diba? You want to get higher education, you get that from investment. You want to have a home or a condo, you do that through investment. So saving and investment goes hand in hand. And of course, being able to make it a habit to invest regularly, that is the biggest way to reduce stress in your working life.
Charles, just very quickly, I have one last question here in Zoom. Is it okay to invest in local funds given the recent rally of Philippine equities? It's very interesting, actually. Does increasing the minimum wage have a negative effect on the economy, especially local publicly listed companies? So basically, I think what he's asking for is the Philippines as an investment destination still bullish?
And I will give you a very, very simple answer. Yes and yes to both of your question. But of course, number one, for the Philippine equities, Philippine story continues to be strong. The reason why we had a very weak performance over the last 2 years is because inflation and COVID. Sorry, 3 years na pala. 4 years na pala ang COVID. But COVID and inflation actually deterred a lot of foreign investors from coming into a market. And of course, for this year, those things have started to abate. We are seeing better prospect for our country. Inflation is coming down, as what Miggy said. And of course, the central bank is poised to reduce interest rates second half of the year, which will allow more liquidity coming in, which will allow businesses to borrow. And of course, for a lot of consumers like you and me, who are waiting on the sideline to be able to invest in a home, that gives us an opportunity. So economy restarts when interest rates start going down and liquidity comes back in. On your second question on minimum wage, just to let you know, this is the last time we have a legislated wage increase was in the 1970s. That was almost 50 years ago. Why? Because it's very inefficient for Congress and even Senate to do that on a nationwide basis. Diba? For NCR, the minimum wage is 610 pesos. 100 peso increase is in terms of percentage-wise, not a lot, but it's still a big sum. But for other regions like Mindanao, where the minimum wage is 300 plus pesos, 100 plus peso increase, 100 peso increase is about 33% increase in income for the employees. But of course, for the employees, it's a 33% increase in their costs, which is huge. Diba? So we saw that, and we hope that the executive level will be able to actually settle on a compromise where wages are actually being directed or dictated by what we have, the regional wage boards. That's why we have them, and that's their purpose, to be able to calibrate what is a optimum increase for each region, because each region have different cost of living standards. And of course, you cannot have a one size fit all type of solution to a problem wherein inflation was really quite significant deterrent for the last 2 years for a lot of people who are actually living paycheck to paycheck. So those things, and hopefully the government will find a better solution, compromise, to uplift the living standards of every Filipino citizen.
Thanks, Charles. I hope we had a longer time to discuss this, because just when things start to become more interesting, we realize that we are running out of time. But Miguel, I'll start with you. Any final word for our audience?
Yes, one thing that I always like to end with now when you have these types of talks is that you may have heard that the Chinese word for crisis can be represented as danger plus opportunity. And in the world of investing, we encounter innumerable moments of crises, from Cold War, Asian financial crisis, the tech bubble, great financial crisis, and the most recent COVID lockdowns that we all here have experienced. And one thing has remained true, that the market recovers eventually. And these moments where, it seems like the worst is yet to come and everything seems so hopeless and you want to pull out all of your investments and just, stick it under the mattress. These are really the times where you should keep investing, keep adding money, and maybe it's good to reassess the risk that you're taking, but to never stop investing, even when there are opportunities like that or crises of that nature that really arise. And, volatility and uncertainty is really something that just goes hand in hand with investing. So my ending statement really is, before you start investing, make sure you know yourself. Can you handle seeing your 100,000 peso investment be down 50,000? If not, if you can only handle, let's say, a 10,000 peso loss, maybe put a bit more in bonds, put a bit less in stocks. If you can handle that sort of loss, then that means you'll get a bit more return. But this is something that you need to know about yourself. And really, just that, keep on investing and make sure you know your own personal risk level, since you don't want to pull out your money when the best opportunities really present themselves.
Fortune favors the bold, ika nga.
Exactly.
Charles, last words?
Okay, just like what Miggy says, for me, it's time invested in the market is better than timing the market. So what does it mean? Stay invested, especially for the long term. You can make some small adjustments. For example, there's an opportunity wherein there's a price drop or there's a crisis, you invest more. Of course, make sure that you have enough for your day-to-day living arrangements. But of course, staying invested is a long-term solution. You have to stay invested 10, 20, 30. I've been investing for the last 20 years already. And so far, it's doing well for me. So a lot of things, when you plan it out, like what Miggy says, have a long-term plan, things fall into place. And that allows you to have a more carefree life, less stress. Of course, we still have our daily jobs that we stress about, but at least on the financial side, you have less stress on that one if you continue to invest your money wisely.
Charles Wong, Miguel Lopa, maraming salamat sa inyong dalawa. Thank you for your insights today. It is with our hope that our audience take something with them, at least to think about when they start or continue their investing journey. Maraming salamat, gentlemen.
Maraming
Thank
salamat.
you, everyone.
Did I mention earlier that for as low as just 1,000 pesos, you can already jumpstart your investment journey. Here's a video on how you can invest in ATRAM funds.
Good day. If you are interested in investing with ATRAM, the leading independent asset and wealth management company in the Philippines, please visit our website, www.atram.com.ph. We have all the details you would need to know about our funds. If you would like to start investing, click Invest Now. For further assistance in account opening, you may email our client services team. If you have more questions, visit the website's frequently asked questions page or ATRAM Academy page. We hope this helps. Thank you.
There you go, friends. If you have any questions again or would like to learn more about ATRAM, please visit our website, atram.com.ph. And to stay informed about our future events and receive important updates, please take a moment to visit our social media pages by scanning the QR code. A replay of today's episode will be available in ATRAM's YouTube channel, ATRAM Studio. Again, you just go to YouTube and then you just search for ATRAM Studio and you will find this recording there. So maraming salamat for your continued support. Lastly, please answer the survey at the end of the webinar, and we would like to know your thoughts and your feelings about today's topic. On behalf of everyone at ATRAM, maraming salamat. Thank you for your participation today. We wish you and your loved ones continued health and safety. Maraming salamat po, and I will see you in the next webinar.